Well, folks, today we go ahead and we discuss a subject that we rarely ever touch on the YouTube channels. We're going to talk about margin. And this is a subject that I see a good amount of comments on recently. I've had people ask me in my private stock group hey, what about margin? And, we're in a time period right now where people are either fleeing the stock market and have been the last several months, or people are either, kind of just waiting it out, or you have this last group of folks, which is the group I'm talking to today, which is folks asking about margin. And hey, is now the time to open a margin account? Is now the time for me to be buying stocks on margin? So I want to address this because I think this is a very important subject, and it's a deep subject, to be quite honest. So I hope you guys enjoy this. As always, make sure to subscribe to the channel if you're not already, okay? Now, how did we get to this place where folks are thinking about margin? And by the way, if you're clueless on what margin is, you just clicked on this video and you're like, I don't know what the heck that is. Opening up a margin account is essentially opening up extra debt you can invest, essentially, okay? So let's say you got $100,000 in your stock brokerage account right now. If you open up a margin account, you can then essentially have another $100,000 of money to play with, right? Money to invest out there. Now, you do have to pay interest on that money, and this is going to be a very important factor we're going to speak about in this video, okay? But how did we get to this place where all of a sudden I'm starting to see questions, good enough volume of them for me to actually address this and do a whole video about this, right? Well, folks are looking at some of these stock prices and they're like, we think these stocks are going to go up a ton over the next 1 to 2 years, right? Look at Facebook right now. It's at a 22 forward P. It's a company that's probably going to grow revenues 20% next year, if not over 20%. And in Facebook, I don't know when Facebook stops growing, but it's not in this decade, I can tell you that. And so this is just a growth beast that's just going to get bigger and bigger, more profitable, right? And plus they got the whole metaverse opportunity, which is just ridiculous. And they're the best positioned of any company in the world to basically have success in that market, right? And here the stock is at a 22 forward PE, right? Folks are looking at that and they're like, dude, that's easy money, just flat out easy money. And I'll be honest, I agree with those folks. That is easy money. It's an easy money stock. There's no doubt about it. Like you put money in that over the next 3 years, you're going to make a bunch of money. It's just a question of, do you double up your money or do you triple up your money? I think that's the big question, right? Or quadruple up your money, right? If you look at a stock like PayPal's pretty dang close to its 52-week low right now. PayPal's at a forward P of 35, which is, in my opinion, too low for a stock like PayPal. And, this is just a beast company. They got the number 2 and number 3 most popular apps of any apps in the entire finance category, right? Between PayPal and Venmo. Those are incredible. And so PayPal is just a beast of a company. You have Square trading near 52-week low, which we know Square from its traditional business model. We also know Square because they own some cryptocurrencies. We also know Square because they have the number 1 most popular app in the United States of America in the finance category, which is the Cash App. And so this is a company that is literally right around 52-week lows right now. And people are like, okay, really? Square's at a 52-week low? This is interesting, right? Those are just some big companies that people are looking at and saying, hey, these stocks are deals right now, right? Then you have this whole bunch of the smaller caps, right, that are looking really, really attractive to folks. People are looking at a Smile Direct Club, SDC, right now, and saying, yeah, it's a higher risk play, but it's also a massive reward play as long as they get through this tough time, right? Stocks have been trading for $2 and some change. This is a stock that was $16 just a matter of, 7-8 months ago. It'd be nothing for for Smile Direct Club to fly back to $10. Never mind above $10 as long as they prove out this business model and they get the cash flows trending in the right way, right? And so people are looking at this and like, that's one of those few, you don't get a lot of opportunities in the market where you can 3x, 4x, 5x your money in a matter of 12 to 24 months. Smile Direct Club actually represents that, right? They need to turn around these the cash flow situation, right? So folks are looking at that one like, oh my gosh, man, it seems like there's so much money to be made there. Corsair Gaming, which has an unbelievable long-term growth story in front of it, right? Right now it's going through kind of, let's call it a tougher time for the business model because they had these ridiculous comps to comp against. And there haven't been any new huge games launched recently. And so everybody's kind of been looking at that one. And they're like, at the end of the day, like gaming hardware is going to continue to grow in the future. Streaming hardware is going to continue to grow in the future. That's what this company competes in. and they do a dang good job. So right now they're in a kind of a tough spot, but at the end of the day, people look at that and they're like, that's a $40, $60 stock long term, right? The Chef has been trading at $15, $16 recently, which, if you're on the Chef train, you know where you think that one's going long term, right? So people are like 15, 16. People really view this as an $80, $100+ stock long term, right? Which is something I view it as. So $15, $16, people are like, come on, man. The planet's almost touched a 2 recently. Actually, I think it did just touch a 2 very, very recently. Actually, I think on Friday, it was in the 2 range, right? Which people are like, dude, are you kidding me? Like, look at what that business has done over the last couple of years and how they've transformed this company into a potential MJ giant long term, right? And now they're trending in the direction where this was, if you look at this company 3 years ago, it was like one superstore, and it was like, okay, what's a big deal with this company? Now you look at this and they got several, superstores. They got several smaller format stores. They're going to have a store in Chicago, many stores coming in Florida very soon here. They got the own brands opportunity. People are looking at this one. They're like, this is on its way to becoming an MJ giant, right? I actually just ordered some Christmas presents for folks, and I got a call from the Planet, and they were just confirming the delivery and whatnot. And they were like, oh yeah, just sorry we're running a little behind. We got a lot of volume and we just have some delays. And I was like, oh, okay. That's a darn shame. You guys are really busy down there. Oh man, that stinks. So yeah, I mean, at the end of the day, when it comes to margin in these stocks, people are looking at that and they're like, dude, I need more money. And especially if you're somebody, right, that you've been buying these stocks as they've dipped, right? Let's imagine it's the Planet, right? And you were buying the Planet at $5, $6 because at the end of the day, you believe the Planet's going to be a $20, $30, $40 stock long term, right? So you're like, $6 is a deal, right? And then it falls to $5 and you buy more. And then it falls to $4 and you buy a ton more. And then it falls to $3 and you're all in. And now you're looking, you're like, dude, I'm all in. Like, what the heck? And so that's where people start to look at margin and saying, some of these stocks are ridiculous deals, and I need more money to invest. I need more money. Let me open up a margin account, and let me go ahead and basically buy these stocks on margin. Okay, so we got a lot to cover here. First thing you got to understand about margin, it is dangerous. Okay, when times are great with margin, it's really great, right? When you are making a ton of money, and when you've got an extra 10%, 20% of stocks that you wouldn't have any other way than having margin, and those stocks are just going up and up and up, man, it is a lot of fun. It really is, because you're like, I am making so much extra money from money that basically is not even mine. It was just issued on, through debt, right? And you're like, oh, I got to pay this interest rate over here. That interest rate's a joke because I'm making, this much on the stock. And so when times are good, man, are times good with margin, right? But on the flip side, if you get too heavy on margin, it can be devastating. I mean, absolutely devastating, because imagine you went super heavy on margin, let's say this summer, right? And you went to a place where you had 40, 50% margin outstanding, okay? So, which would be considered heavy, because anything over 50%, then you can start getting margin calls. So basically, if you have $100,000 in stocks, you're okay having $100,000 in margin, but once the margin rate goes over 100,000, now you have more margin, right? More in debt than you do equity. That's when you start getting margin calls. So imagine you this summer put $100,000 in your stocks, right? And then you bought another $80,000 on margin. You're like, I still got $20,000 of wiggle room. It's not that big of a deal, right? And then imagine you go into this fall and it's wintertime when these stocks just get hit. Boom, boom. You go into PayPal, you're in Facebook, you're in the Planet, Tattoo Chef, Corsair, SDC, whatever these stocks are, right? Honest, whatever, right? Basically almost anything that's a small cap stock has fallen, 40, 50, 60, 70, 80% recently. I mean, if you had been going in on margin, you would already be in a position where you've already gotten margin called and you've already gotten your accounts destroyed, right? And so this is where you really have to watch how much you're putting on margin, right? And so if you're going to do margin, first off, who's right to do margin? Well, I think only experienced investors that have been in the market for a long time are, I would say, acceptable for margin. Also, man, you better be able to control yourself, because if you can't control yourself and you are a more emotional investor, no, okay, I'm telling you that's going to end up into a lot of trouble. If you can think about things practically and you can be like, okay, here's why I shouldn't take this risk here, here's why I should take this risk, it's a little different story, but I can tell you not everybody's cut that way, right? Not everybody's cut that way. Like a lot of people are just, they basically invest on emotion, all right? And this gets into the next point I want to make, which it doesn't matter what the stock price is right now. Always remember it can go lower. As dumb as it might be, it can go lower, okay? And so the Facebook's at, 300 something and at 22 forward P. There's no stopping Facebook from going to $250 or $200, right? That would be dumb, just flat out. That would be dumb for Facebook to go those prices, but it's a possibility, right? What if the S&P 500 pulls back 10, 15%? It wouldn't make much sense for Facebook to be at $250 or $200, but guess what? I can make the same argument about Facebook right now. It should not be at $300 something. Their stock should be a $500+ stock right now. And it's trading there, okay? And so if it's trading there, it doesn't mean it can't go lower. And so this is a next important part to remember is even if you think a stock is at a silly price, it doesn't mean it can get worse, okay? I remember I went really heavy on margin on Win stock, and this was probably, what year was that? I think that was 2014. Win stock was getting hammered. Win Palace was coming, and I thought that was going to be a huge property, and I went really heavy on margin back then, right? And Win stock kept going down, and I started getting margin calls. And this is way before I had YouTube channels and whatnot, and I was just like, my gosh, this is so ridiculous. And finally, Win did bottom, and then it started to go up, right? And then it went from like $50-ish, where it bottomed. I think it technically bottomed at $49 something that year. And then it went from about $49 all the way up to $200-ish over the next 2 years. And so everything did turn around, but it was just like Win kept going down, and it kept going down, and it was like, when is it going to stop, right? And that was my first big experience having a lot on margin. I had 6 figures on margin back then, and I was like 24 years old. And all of a sudden I was getting these margin calls, and it was like, oh my gosh, like seriously? What is going on here, man? And so this is something you've got to keep in mind. If you're going to go the route of trying to invest on margin, you've got to understand it can get worse. Also, you can get a random event out of nowhere. Like imagine this is the beginning of 2020, right? Or the end of 2019. And imagine you're going, heavy on margin because you're like, hey, this year is going to be a pretty good year, blah, blah, blah. And then all of a sudden a once in 100-year health event comes out of nowhere, right? And the stock market crashes the fastest it crashed ever in history, 35% in 22 trading days, I believe it was for the S&P 500. Imagine you were in that scenario, right? And there you are. You're just watching you lose all your money. Because a 35% drop, if you were super heavy on margin, you could have lost your entire account during that time. And so you can't ever discount the possibility that could happen, right? Like something crazy happens and all of a sudden the whole entire market drops 20, 30, 40%. It's a possibility, okay? And so this is where margin can get very, very dangerous if you have too much on margin. Now, if you're going to invest on margin, I think there's 2 things to keep in mind, right? I think that you got to stay under a 20% margin rate, especially if you don't have like a decade plus of experience doing this. But even if you do, I think you got to understand it is very, very dangerous if you have, over 20% margin. Very, very dangerous. All right. So meaning, let's say you have $100,000 in your account to have, more than $20,000 margin money also. I think you got to understand you're playing very dangerous. Okay. Very, very dangerous. So you got to understand that. Second part you got to think about is your interest rate. And for most folks, they don't have negotiation leverage when it comes to interest rates. Okay, I've been fortunate. I've been doing this a long, long time, so I have, I have a lot of money in the stock market, obviously. So I was able to negotiate a 1.55% interest rate for my margin account. And so if I want to do any margin, I'm paying some interest, but it's hardly anything, right? I can tell you, back when I didn't get that much respect, and I only had, let's say $200,000 in my account or $150,000 or whatever, right? There was no negotiation leverage for me. Back then I was having to pay, I think it was 6 or 8% interest rate. I think it was actually 7 or 8% interest rates back then, right? Because I didn't get any respect. I didn't have enough money, right? I didn't have millions and millions of dollars in the market, and I didn't, have all those sorts of things, right? I didn't have any negotiation leverage. So basically, back then, I had to get an 8% return just to pay off my margin back then, right? That's a tough scenario. That's a whole different game than if you were paying a 1% or a 2% margin rate. Because if you're paying 1 or 2% on margin, now you only need to get a 1 or 2% return to make it make sense, right? Heck, the S&P 500 on average goes up 8%, right? And so if you're all of a sudden paying a 7%, 8% interest rate, basically, if you were just in the S&P 500, you get 8% on average per year, you're just paying off your margin interest, right? And so that's where you get into a really, really tough scenario there. And so I think, for the vast majority of folks, I don't think margin's the right thing. I don't think most people have the experience to really, truly execute on margin and keep it safe. And the last issue I want to talk about with margin here is, let's say you go big on margin right now, you make a bunch of money, right? Because all these stocks start flying up, all the small caps start flying up, which is definitely a realistic possibility. I would say there's a higher probability of small caps beasting in 2022 than going down, right? It's not a for sure thing, but I would say there's a much higher probability that small caps will beast in 22 versus go down, right? So let's say you make a bunch of money on that, right? And you're like, dude, I just made myself an extra $10,000, $50,000, whatever, $100,000 because I was on margin, right? The issue becomes, then you got all that extra money and you start feeling like you should invest it in the next one. And maybe that can go good for a bit. And then all of a sudden you start getting a bear market in certain stocks, in certain groups of stocks, like we've just obviously had in small caps, right? And next thing you know, you start getting devastated when you really shouldn't be going that heavy, right? And so this is some food for thought there, that if you do have success, it's going to make you want to do it even more, right? If you have pain, a lot of times people pull back and they're like, I don't want to do that anymore. But if you have success, it's going to make you want to go even more crazy, right? And then does it end up coming back to get you? And if you're going pretty heavy on margin, there's a good chance it could come back and get you, right? And so this is something very, very important to keep in mind here, guys. And so like I said, for most people, you shouldn't even consider margin. If you are going to go that route and you're like, dude, you can't tell me anything, I'm going on margin, you better be paying a super low interest rate, and you better watch how much you actually have on margin. You better keep that number low. I'm telling you, if that number gets super high, you're playing a dangerous game, and you're setting yourself up in a position where you could potentially start getting margin calls left and right and have to sell stocks at very, very low prices, right? That you don't want to sell your stocks. But if you have no choice, you have no money to funnel in your account to get rid of that margin call, you're all of a sudden in this scenario where you're like, dude, I'm getting destroyed here and I'm getting margin calls and I'm selling stocks at these ridiculously low prices and my brokerage is forcing me and there's nothing you can do about it other than deposit a ton of money. And you probably don't have that money to deposit. So which means you have to sell. That's an ugly scenario, guys. So anyways, hope you enjoyed me talking about a deep, dark, secret subject like margin, okay? Because I know a lot of folks, obviously recently are starting to think, hey man, what about margin? What are you thinking about this? Let me know your guys' opinion in the comment section. Love to hear from you guys as always. Don't forget to subscribe. If you haven't subscribed, what in the heck are you doing? Much love as always. Have a great day. Peace.